This is Little by Little with Andy Schechtman.
Hi, everybody. Just a quick catch up with my friend Jason Cousins, CEO of Glint, who just messaged me, said there's something we all need to talk about. What's going on, brother?
Hey, well, listen, Bloomberg's come out with Trump tariff risks Royals gold, silver as New York prices jump. The future prices are more expensive than New York as funds exit shorts, and tariffs could raise the premium further if applied to metals. We're also getting our suppliers telling us that things are changing in the market. And so I thought who best to call but the bullion baron himself, Andy Schechtman. Let's just talk about it quickly and get it out there. I mean, the last time this seems to have happened, in my memory, was kind of during COVID, when premiums jumped quite a lot. But what's your view on what's going on here?
Well, that would make a lot of sense, Jason. I think what they're probably trying to say, I haven't read the article yet, but the premiums for gold and silver futures contracts in New York will jump in the face of traders worrying that these precious metals, gold and silver, might be included in tariff plans proposed by Trump. And when you see gold rise by $60 an ounce or 2%, over the London spot price, and silver futures are up around $1 or 3% over the London spot price. To me, what this signifies is traders are hedging their bets at the banks and funds in particular that are massively short. Well, they would be closing their short positions in New York. And they would be doing that because if they don't, that will cost them a little bit of money to do it right now. And there's a large short position. But if they don't, there's something, these short positions all have a clause that says we can stand for delivery. And most of these short positions are naked, meaning they don't have the metal behind it. There's way more short positions than there are bars available to be delivered. And so what would happen in essence is that they would have to cover if someone, or be forced to deliver in the environment where there are high tariffs on importing the metal and what's called exchange for physical, where you purchase a contract here in New York and then exchange it for physical out of London and have the bars imported into the U.S. That would come at a pretty hefty price tag. So what you're seeing is a preemptive run to protect themselves, if you will, from getting crushed and having to pull in these bars if indeed the counterparty, the long, says we're going to stand for delivery. And if that's the case and they don't have the gold or silver here in the States to do it, they would have to import it at a potentially massive 10% or whatever that tariff would be loss, which would make the entire trade very inequitable. In fact, it could be very dangerous to some of these very large short positions. It's a very bullish sign because you have massive shorts, and this is something I've been screaming forever, huge short positions, naked short, which have really been the manipulation of the market. They can control the market by going short, by driving the paper price down, by selling and selling and selling and selling and selling, because their balance sheets are big enough to stand behind it. And if you now have the ability to take delivery, as we're seeing by a lot of the sovereign nations, no, we'll stand for delivery, thank you. If you don't have it and you have to exchange for physical, which you could always have done before without a tariff, you have to do it with a tariff. You're talking severe problems for some of these big commercial banks.
So just for people who might understand the language about shorts and long positions, what you're talking about here is the big trading companies, the big banks, the bullion banks, they've bet the price of gold is going to go down. That's what a short position is. Yeah.
And so that you can buy it back later at a lower price.
Yeah. But here we are, we're in a situation, they're suddenly looking down the next week or two, they're thinking, gosh, this Trump guy, he might put tariffs on gold. Therefore, we bet the price is going down. In fact, that'll just drive the price up massively. We'd have to if we had to take delivery, if we have to give delivery, then we would have to pay all of those tariffs. So they're panicking right now. As then John Reed at the World Gold Council says, these market participants believe that there is a non-zero probability of tariffs affecting gold and silver. So what he's saying is they're thinking, hey, even if it's a small probability, that tariffs are put on gold. The implications are huge. Is that right?
Yeah, I mean, you have traders that are attempting to preemptively protect themselves from the financial implications of these tariffs. In other words, they're being forced to cover long before they really want to, because you're not talking these trades can be a few percent one way or the other that they intend to make on huge volume. When you're talking adding a potentially 10 or 20 or 30, who knows how big these tariffs would be, onto the importation, you're talking these trades would be substantially underwater. It's really a big problem if you're naked short right now. We've been saying forever, being naked short in this environment is dumb as a mud wall. You bring Trump onto the stage, who will put these tariffs on importation of gold and silver, it could be quite disastrous, actually.
And the kind of thing that could trigger all kinds of systemic problems.
Well, it also would trigger what's called a short squeeze, where when you cover your short, that means you go long. You buy the short back, which pushes the price up higher and higher and higher, and then triggers all of the other shorts to get a margin call or cover. And so it pushes the price higher and higher and higher and higher. Remember, the whole premise of a short is that you think the market's going lower and lower and lower. So you sell short, you get money, but you have to buy that short back at a later date. But the other side of that short could say, I don't want cash, I want the physical, please. And if you don't have it and you have to get it, and you traditionally would get it through something like what's called exchange for physical, you trade the paper contract for physical sent to you from the UK, that's a problem. And that's a big problem. And so I think what you're seeing here is a preemptive rush to cover. And this is no small deal when you have such a massive short position that could very quickly push the price up. And you have both managed money and commercial banks that are exposed to this in a very big way. And it's one of those religious moments where, it's a religious experience where you're kind of staring down the barrel of a gun and you need to decide, do I do this now, even if it's at a loss, or do I do it later, potentially at a massive loss? So interesting times we're living in for sure, brother.
Yeah, which is why we always say you should buy physical. Whether you're buying the bars, but in your possession with Miles Franklin, or you're buying the bars to be stored with Glint and you be able to use it as money, physical is where it's at, because all of this financialized system, this synthetic paper system, it's all a kind of it's a pack of cards.
What's really interesting, Jay, is that the market sniffed this out before this announcement came out. So this announcement was just sent to you, and the premiums on exchange for physical 2 nights ago went straight up. And I was kind of looking at that saying, what the hell's going on? The market is saying that these premiums for exchange for physical all of a sudden have gone much higher. The market participants were told about this before the public was, by a day or two. And you can see it in the response to the premium for exchange for physical. This is a very dangerous time to be short. You got to be out of your mind to be short the amount that some of these institutions are, because they're short naked, meaning they don't have the metal behind it. They just have a big checkbook. Well, the whole thing with going long is you can lose whatever you put up. When you go short, you can lose unlimited. It just keeps going and going and going and going and going. And you just keep getting beat harder and harder and harder and harder. If you put up $100 and go long and it goes to zero, you lose all of it. If you go short, it can keep going to the moon. And you keep losing and losing and losing. And it's an existential threat. As I've been saying for a long time to some of these banks, and now to some of the managed money, the hedge funds, it would be a very scary moment right now if you're holding a large short position in metals and trying to decide what's the right course of action. Thank you for bringing it to my attention. I think people need to know this. It's another reason to not time the market. Cost average if you must. That smooths out uncertainty. But it just goes to show, just like that, things can change. And I guess we'll have to see how this ultimately plays out. But it is interesting to note that the futures price right now is $60+ ahead of what the actual physical price is. And so that's telling you that out into the future, the market sees much higher prices, whether it just be through higher prices or aided by something like this. So yeah, I wouldn't be surprised to see much higher prices in both gold and silver heading into the end of the year as a result.
Yeah, so just like during early COVID, supply chain pressures and rush demand for physical gold are making prices spike.
And
delivery.
let's not forget physical silver either, my man. Now that Glint has it on the platform, I know we weren't going to talk about it, but I just had to sneak it in there because you know what? I personally feel silver is the opportunity of a generation, and I'm thrilled that you folks have added it onto the platform. I'm also thrilled to help represent your wonderful, wonderful product here in the United States. So appreciate you bringing it onto the show here and alerting me, and we'll get this out right away, and hopefully it helps some people.
Yeah. So yeah, if you want to get your orders, then obviously they can get in touch with you. And if they want to download the Glint app, just go to your favorite app store, download the Glint app, and put in Andy24 in the referral code so we know it's come from Andy's show. So yeah, Jim, when you're signing up, Andy24, put that into the referral code. Andy, always good to speak to you.
You too, my man. You too. Interesting times, brother. That's a Chinese curse. May we live in interesting times. But I'm really happy to go through these interesting times riding shotgun with you. Couldn't think anyone I'd rather do it with, Jay. I hope you have a good rest of your evening over there in the UK. And I look forward to picking up with you and looking at the world's developments real soon.
Speak soon.
See you, brother.
Little by Little with Andy Schechtman.